escalated quickly. I mean, that really got out of hand fast.
It jumped up a notch.
It did, didn't it?
Yes, things did escalate quickly. Hey, welcome to the ANDIKA Bulletin for Thursday, 1st of December 2022. Overnight market moves are well worth noting. US stocks went into turbo mode as Chairman Powell offered some hints that the Fed might be starting to moderate in their rate hiking policy. But just keep in fact that Powell also said that the terminal rates could still stay higher for longer and restrictive policy might need to stay in place for a lot longer. Anyway, the Nasdaq ripped up 4% on the day, while the Dow managed 2% gains and the S&P 500 rose about 3%. Really mainly thanks to a really big, huge short squeeze that still went on into the marketplace. And there were a lot of traders apparently that were really getting stuck into call options around the 4,500 strike. So a bit of people squaring up books and that sort of thing. We saw the VIX drop down to just near 20. So that's on a pretty low level. And of course, everything in the melt up today is just really quite mind-boggling. The US markets are actually up about 20% from their October lows. So that's been one incredible turnaround. And, sometime you've just got to think as the market just pushed itself just a little bit too hard here. Just back onto the rates, because that's really the big thing to happen in our calendar, being the 1st of December. Our RBA will meet next Tuesday, and the tip there is they'll put rates up about 0.25%, taking our rates from about 285 to about 310. That's the sort of tip there. As for the Fed Open Market Committee, they will have their meeting on December 13 and 14, and the tip now is just a 50 points hike looking in for December, and less than a 45% chance that they'll do the same in February. So the pace of rate hikes, according to the market, seems to be slowing down, hence for the exuberance, because once they believe things are slowing down, then the next step for them is, a pause, and then the pivot meaning we start looking at rate cuts. But I think people just need to remember, whatever the US Fed does, and obviously what the RBA does to follow, they're not necessarily going to, cut rates that quick. I got a feeling when they do start to level out, in the sense of this finishing up with the rate hikes, they're going to sit on those levels for a while. I'm talking at least 6 months to really make sure they can try and tame the inflation beast. The other big thing, of course, was just the US dollar. It really underperformed on the back of all the sort of news, and I believe it was the worst month for the Bloomberg Dollar Index since May 2009. So that tells you a lot in terms of that, in terms of just how the markets can move really quick. And I'll just now finish up with my favorite chart. Finally, what happens next? So here's my favorite chart, plotting the S&P 500 as it currently sits against the same S&P 500 back in 2008 and 2009. That's where you are right now, as you can see there. And you can also see that's when the Fed meeting is going to happen about here. So we've got, 2 weeks to see if this prediction unfolds like it did back in 2008 and 2009. So that's it for today. Have a great week. I won't be able to do the bulletin tomorrow, being Friday. But happy Thursday, happy new day of the month. Take it easy, and we'll catch you next week. See you later.